Good morning. Good morning. Okay. I know it's the second day, but we got an interesting topic which is very close to my heart, which is the evolving evolution of payment landscape, specifically the way it's happening in Asia. Cash is the enemy of inclusion, is the seminal thought that leaders, regulators, and governments have believed for the last decade. This has led to a lot of innovation, a lot of governmental push that has happened over the last decade, and is going to continue for the next decade or so. There are 48 countries, as per the UN Charter in Asia, with about 4.5 billion people in population. That's more than about 55% of the world's population is in Asia. And if you really want to impact the world, help people prosper, it cannot happen without Asia. Asia has to lead the way, and that is what is predicted to happen as we speak. The next 30 minutes, I would largely want to cover three areas. One, how is this ecosystem changing or has changed over the last several years? And then how is it predicted to grow over the next 5 to 10 years? The second is what are the risks associated because of that? And third, what do we do here as the best of minds come across Asia from the security standpoint to work together to make sure that this evolution is supported with the right guardrails? So let's look at the numbers for one moment. There is 19.8% growth that is likely to happen in terms of the payments, digital payments, between now to 2027. The volume of transactions is likely to cross about 1.3 trillion, the non-cash transactions this year. It's expected to leapfrog to about 2.3 trillion in non-cash transactions. That's a whopping 70% jump in the non-cash transactions. Third, the real-time processing transactions are likely to continue at a compounded annual growth of 14.1% from 2022 to 2027. The B2B payments revenue, which is the commercial side of the revenue stream in the business model, is likely to grow and double, in fact, to US about $1.4 trillion by 2026, at a compounded annual growth of 10.5%. Just to give you some sheer numbers, last year, India did about 46% of real-time transactions. The five fastest growing payment markets in the world, out of which 4 actually come from Asia. First, the 4 that actually are in Asia are, first is, of course, India. You have China, you have South Korea, you have Thailand. And the only other country which is across the global country which is missing in Asia is Brazil, which is growing really, really fast. So the digital payment infrastructure, if you see the growth, is happening in Asia and is going to continue to happen in Asia. And also, just to give you a perspective, the number of transactions per head in Thailand per month was about 22 transactions. That means every citizen of Thailand actually did about 22 transactions per month. That's a whopping digital payment transformation that is happening in Asia. So what is fueling this kind of growth? The first is the fact that technology is really transforming, and the enablers is typically telecommunication. With the rollout of 4G, 5G, and 6G in the in the ensuing years, there is going to be a tremendous enablement that is happening. There's a lot of ecosystem, which is supporting ecosystem that is going to facilitate payments. And more importantly, the regulatory push. We'll talk about it a little later. So the digital wallets is expected as a component in e-commerce to double, as a form factor of payments. There is unified QR code that is working. I had a friend the other day come from the US to India, and a merchant, and a street merchant is accepting QR payments. I'm not sure how many of you have been to India, and I know the same thing is happening in Thailand and Malaysia as well. The embedded financing, the business models are changing today. Earlier, you would actually need to do a transaction, and you would actually have to make money out of the payment transaction. But now, embedded financing, which is associated rails or business models are being found to enable and push for payments. And that is expected to grow at almost 24-25% to about $300+ billion. The second thing that is fueling this kind of growth is cryptocurrencies and, of course, the central bank-backed digital currency, what we call as CBDCs. There were about 30 countries in 2020 which had a roadmap for CBDCs. Guess how much is it in 2023? Any guesses? 130 countries, covering almost 98% of the world's GDP, is actually having a program to explore CBDCs, which essentially means that it's not if it's going to happen, it is going to be when and how. So CBDCs are going to be a very, very key component. As we speak, we all know that there is a lot of work that is happening in Singapore, in the Singapore Fintech Festival, trying to drive CBDC as a key core of cross-border transactions. We'll speak about it. I have a separate slide on that as well. But just to give you a share of what's happening and how CBDCs is transforming, you look at China, there are over 5 million merchants already accepting digital yuan. The third is the rise of payment as a service or platform as a service kind of a component of the API models. Traditional players in the market obviously find it very difficult with this disruption. But the good news is there are associated fintechs and startups which are actually helping traditional banks and organizations which have been in the ecosystem to grow at the pace at which the digital disruption is happening. There are new business models that are coming through. 48% of the businesses are using payment APIs, and roughly about 80% of the organizations claim operational efficiency with this kind of an ecosystem. So the collaboration that is happening between new tech and traditional banks is extremely encouraging, especially in Asia. And we see a lot of these kinds of things that are happening, which is also facilitated by a lot of governmental push. The launch of new services. What is heartening to note is countries and regulators are coming together. Australia, Hong Kong, Malaysia plan to roll out the request to pay services, which is what's largely a concept which was not very popular in the immediate payment systems or instant payment systems. But now a request to pay could also happen. That means that you could actually make a transaction and request for a payment to come in. And Indonesia will be rolling out its own instant payment service. UPI today, after UAE, Indonesia is going to have its own UPI. The fifth factor which is really pushing for the digital disruption in Asia is, of course, the focus on digital payment security. The adoption of EMV 2.3, which is the latest version, which is also enabling enhanced customer experience, including our own PCI standards, which are coming together to help the ecosystem secure their data. Further, using of biometric for authentication is really, really encouraging because it just reduces friction for payments. And Project Bekong, which all of you would be familiar in Malaysia and Cambodia, has actually got together to actually use the new digital rails to actually make remittances for Cambodian people who are actually working in Malaysia, send back money back home. And very soon, the reciprocal is going to be launched. So the macro trends are really, really encouraging. But what is further very, very interesting in the digital space as we see the next couple of years is cross-border remittance. It is given to understand that about 6.6% of your transaction cost is actually deducted when you actually remit, right? I mean, basically, you end up paying 6.6% when you actually do an international or cross-border remittance. That means for every $100 you remit outside, you end up paying $6.6. That's a big number. That is what is going to change in the next few years to come. Regulators and startups are working together to reduce this business, reduce the cost of this transaction, enabling millions of transactions which is going to happen cross-border. So if you look at it in 2022, Malaysia, Singapore, Indonesia, Thailand, and the Philippines signed to integrate their QR payment systems. Cambodia and Malaysia, I spoke about, launched the Bakong. And then you have Thailand, China, Hong Kong, and UAE tested a cross-border digital currency backed by the BIS. And in March 2023, we all know this, the BIS, Central Bank of Malaysia, and then, of course, the Central Bank of Singapore came together for the Project Nexus, which is for cross-border payments. And that is a big, big change where countries are coming together to solve this major problem. Because remember, cash is the enemy of inclusion. So when you actually lose $6.6 for every $100 that you are remitting, remember that worker or that international worker is actually, or anyone who's doing cross-border transactions, even when you want to order something online, you're going to lose a lot of money. And that is going to be a revolution in the digital payment space over the next 5 years. For those of you who thought that the digital payment is already going through a big change, hold on, it's going to change more. So having said this, when I started off, I said I would actually have this in 3 sections. The first section is just to give you a glimpse of what is happening in the digital payment space and how is it going to evolve over the next couple of years. But why are we here? I mean, we are not here to solve that problem. I'm sure those are the things that are being solved at the other Singapore Fintech Festival. But here as payment security professionals, we are here to address and understand the risks that are coming our way. The flip side of all this technology evolution is the rise of cybersecurity and data privacy risks. If it was only enough for us, we have more on our side coming. APAC was the most attacked region in 2022. It accounted for about 31% of attacks globally. 49% of successful attacks on organizations result in compromise of sensitive information. Rapid update of real-time payments has led to something called APP frauds because of social engineering and those kinds of frauds, right? I'm sure all of us would have heard about those social engineering calls where OTPs are compromised, SIM swap attacks are happening, and so on and so forth. And the most common ads on the dark web monitoring in the region are for the sale of network access credentials in China, Thailand, and India. So you have this entire market which is also growing to attack this region and this growth that is going to happen. So one of the key things that we've always, as a cybersecurity company, we are a payment forensic investigator, a global one, and we publish a report which I'm sure some of you have read it, is referred, and we put together our forensic learning sessions. And some of the statistics just to give you, and also you would have also been aware that the most common kind of objectives that we are seeing today is ransomware, right? And typically, in any of these compromises, we have 3 basic phases. One is, of course, the ingress. The second is lateral movement. And third is finally the action and objective, right? And what would the intruder actually want out of doing this entire work? Some inputs and data for you to refer. In 48% of those cases that we observed, intruders utilize stolen credentials to access networks via remote accesses. And for all of those who have read, and I'm sure familiar with the ransomware as a service, there are brokers who actually are focused only on targeting and stealing credentials from organizations, and then give it to ransomware operators to actually penetrate and monetize those essential credentials, right? So 48% is a big number for intruders and actually stealing stolen credentials and using social engineering attacks more importantly. And in 55% of the cases, the intruders used weak credentials to authenticate to API requests. That means that credential access is something that is extremely used for gaining the first foothold into a corporate environment. One of the key things that we always say is that, and we probably also observed in our forensic investigations, is that the intruder never accesses your crown jewels directly. They go through the weakest point, and that could be your HRMS systems, that could be your web application or a server which is meant for deprecation at the end of the day, or for phasing out. They just need a foothold of getting into a corporate environment. And that is typically what we are seeing as far as ingress is concerned. And once they get a foothold in the environment, then it's about lateral movement. And what we are seeing is web shells continuously being, were the most common backdoors which were observed when we actually did a forensic investigation. And they're also able to create registry keys to execute malicious code, and from there achieve and step onto their key objective. One of the trends that we are also seeing a change is that earlier there was a necessity to exfiltrate data out of the environment. But today what we are seeing is because of ransomware and ability to hold customers or organizations hostage, you are actually able to encrypt the data. So 73% of the cases, the final outcome has changed from stealing sensitive payment data to actually encrypting it and then demanding ransom. So these are some of the commonly observed intruder threats that I just wanted to cover. So before I come to the third section, which is what can we do from a security and a compliance standpoint, I just wanted to briefly cover the regulatory waters, which is also changing, because we should be mindful of how the ecosystem is also evolving. At the end of the day, as security professionals, we need to support the ecosystem. Regulators are obviously concerned with this kind of growth that is happening. It is their interest to make sure that the end users, like you and me, are secure, right? Because that is the number one impediment for digital payment adoption. With that being said, there's going to be diverse jurisdictions. Every country, and rightfully so, is going to have its own regulatory mandates. And when we are going to operate as payment security professionals or as organizations, we have to deal with diverse jurisdictions. Multiple regulators are going to be looking out to make sure that we are able to convince them on the cybersecurity standpoint. And it can be a deal breaker if we don't do it. But the good news is that there are digital economic agreements, what they call as DEAs, which are being signed between governments so that there is a common understanding of the technology as well as the security and regulations and standards and processes that should be followed. And what is heartening to note is most regulators are also having sandbox kinds of environments, which is allowing startups to go and experiment on real and as close to a real environment, which is also allowing for great amount of disruption. So one of the key things that we as security can also do is use security components in those sandboxes to make sure that they are actually secure as well, so that when it goes to production or go live, you can also be rest assured that it has the due controls that is required. And the future focus is going to be on coherent cross-border policies and, of course, quick regulatory alignment. And I understand that there are regulators in the room, so it's always going to be useful if there's going to be more such agreements between jurisdictions to evolve and make sure that this fact of cross-border payments really works out for the industry. So coming to the third part of my presentation, which is, how do we make this happen? I mean, all right, the first part was that cash is the enemy of inclusion, and digital payments are going to change the landscape, and it's changing dramatically, and Asia is going to lead the pack. The second was on the risks that are going to come our way, and how can we be prepared, or what should we be, at least be sensitive about. And the third is what should we be doing, right? And from a security standpoint and a compliance standpoint. I'll cover that in two parts. So one of the key things that we publish is our top 5. So I've just made it easy for us. Obviously, you've had other reference points, but it's a good anchor for us to have this conversation. So one of the key things that we have found from our forensic investigations is, the first thing is about how can we stop the first intrusion, right? The ingress. And one of the key things that we have observed, while we are all fascinated with the zero-day vulnerability, but the reality when we do forensic investigations, it's because of a known exploit, and for which there may be a patch even. So one of the key things from a security standpoint is across your environment, because of whether it's a PCI environment or a general payment ecosystem, is to actually have faster vulnerability mitigation programs. What we are doing today is not good enough. That's the brutal reality. We need to do faster. Implement an automated cloud-based patch management solution, or whatever you feel is the right way to address those patches. Because at the end of the day, the best option that we have is to stop the ingress. The second is endpoint protection. Today, it's a reality. Thanks to we coming out of the pandemic, data is everywhere. Earlier, we could always say that data is only in the data center, but today the reality is, with whatever technology we are using, data is on the endpoints too. And in many cases, we do not know what that data is at these endpoints, and we don't even have a control over it. So, and most importantly, you do not have a mechanism even to identify, detect, and respond on that particular endpoint. So endpoint protection, whatever you need to do, discover data on those systems, be very clear what data is there across your endpoints, and classify them. So having a data discovery or classification solution really, really helps. The third is about having a process, an intelligent way of detecting and responding to an incident which is going to happen. While we've done our best to reduce the intrusion or the ingress points, the reality is there's always going to be one clever person who's going to click that link. And once they get a foothold in their environment, they are going to do lateral movement. So how do you detect and respond in a quicker way at the end of the day to make sure that before they actually achieve their objective, you are actually able to arrest it? And that's where you need an active detection and response mechanism. Your log monitoring, we spoke about it yesterday. I saw some of the speakers talking about the requirement 10 in PCI, which has become so extremely important, because at the end of the day, you would need to identify the intruder well before he or she achieves his or her objective. Then, of course, is the multi-factor authentication. And then, of course, the fifth is the fact that you need to have attack surface reduction. On the MFA component, I mean, I don't want to preach to the choir here, but the fact of the matter remains is that still there are many devices which are not configured on MFAs, and that's the brutal reality. So how do you get that across? How do you make sure that your admins have a hardware-based MFA, which we have started seeing is more efficient than having a software-based MFA, especially for the fact that we started seeing a lot of attacks through MFA fatigue or SIM swap attacks, especially in the higher credential, higher privileged accounts. Can we move to a hardware-based MFA to give an additional layer of security? But it is one of the critical ways to stop an intruders actually perpetrating and achieving their objective. And of course, the attack surface reduction is how do you reduce your entire attack surface so that at the end of the day, you have lesser things to protect. And it's easier said than done, but has to get started sometime. One of the conversations that I keep having with people across our customers is, how do we get started? Or how, it's a mammoth exercise. But I think the first and foremost is to know what you don't know, right? And we always say, in life as well, since we spoke about Sui Chow, three things that you should know is what you know don't know, and then what you don't know that you don't know. And you want to avoid being in the last bracket, what you don't know that you don't know. So reducing and kind of understanding what data that you carry in each of your environments, each of your devices is going to be extremely critical. So the third section, I said, one is, of course, good security, and the second component is, of course, compliance. You've spoken enough on the PCI 4.0, one of the gold standards, or the gold standard that exists for payment data security, can be extended to all or the new emerging technologies that are coming forward in the payment space. You could still use these standards for extending and protecting your environment. It's not necessary that the PCI DSS standard should only be applicable to your restricted scope, but could be extended because it's nothing but a list of best security practices. But so just to summarize my key construct of today's presentation, one is, as we are evolving this landscape, payment landscape in Asia, it is extremely important that we as payment security professionals come across and address two components. One is security and the other is compliance. And then actually, of course, there is an integration point. Compliance should give you security, but it has to be done in the right spirit and in the right intent. I'm sure all of you have gone through that a number of times. So with that, I just want to summarize what I have to, what we've discussed over the last 30 minutes or so. First, cash is the enemy of inclusion. And I think that is the premise on which all governments are going to work as we move forward in Asia. And with 4.5 billion population, that means about half of the world, more than half of the world is in this part. If you want to really impact humanity, it has to start here, and it has to lead the way. So Asia is going to lead going forward in terms of digital payment disruption and evolution. And there are new form factors of payments which are going to come in. Mobile technology is going to lead the way. You're going to see a lot of form factors with mobile as the basic interface. And going forward, you're going to see a lot of that going to happen. But with that is going to come new threat landscape, new challenges, new territories that we're going to see. And I don't know whether my presentation was intentionally kept after switch off, is we're going to have to unlearn and relearn and actually innovate along with the innovation that is happening in payment industry. So like the way Bill Gates once said, that innovation is the most compelling force for all humanity going forward. With that, I thank you all for your time, and hopefully I made sense. Thank you.